All right, let's talk about leverage trading. So you can spot buy, and a spot means you buy at whatever the quoted price is. So the quoted price of Solana right now is 131.08 or 130.88 or whatever it is. That's what you buy at. You can limit buy or limit sell, which says you pick your price, and if it ever hits that price, it could fulfill your order. Or you can use perpetual trading. I'm going to show you how to do this on Solana, on Jupiter. Now, the terminology I'm going to use today is very similar to every other platform. So if you can learn how to do it here, you can learn how to do it on any other platform that you want. Maybe there's another platform you like better than Jupiter for whatever reason. So in a perpetual trade, what you're ultimately doing, and I'm going to explain this in plain English. I'm probably not going to use the proper terms, but I'm going to explain it in the way that I understand it. Okay? You're buying an amount of crypto at a value that you don't fully own. So you're putting up a little bit of collateral and you're getting more. And if you lose, right, if it goes the opposite direction, which I'll show you some numbers in just a minute, you lose your crypto. So it's kind of like hitting the roulette table. But if you win, you can win pretty big sometimes or small. It just depends. Right? So let's see how this works. So there's two ways that you can do this. You can long it, which means you think it's going to increase in price, or you can short the market, which means you think it's going to decrease in price. So long is increase, see arrow up. Short is decrease, you see arrow down. Now from here, it says how much do you want to invest? We'll call it invest. Let's say you want to invest 1 Solana. And if you want to go a leverage of 1.1x, which means it's very, very little leverage, it just means you're going to get a little bit more value. So if you think the price is going to go up and you put in 1 Solana, it's going to be kind of like you own 1.09 Solana. Right? You own a little bit more than what you think you have. Now, if you want to leverage at 20x, now it's like you own 19.6 Solana. So if you put 1 Solana in, you think it's going to go long, you think the price is going to increase, you do it on a 20x leverage, it's like you have 19.6 Solana, and you can sell that. So you're buying in at 131.7 or whatever the price is. You can sell that at 140 and you make 19. You have the value of like 19 Solana. So instead of, let's do math. Let me pull up a calculator here. So let's say you buy at 130 and you sell at 140. So you make $10 a piece and you have the value of 19 Solana. You make $190 in profit. And that's your money. Now, you had a little bit of risk on here. You had about $130 worth of risk. But you can do these gains or losses in any market. You can do them multiple times a day. You can do them at any level of risk that you want. You can predict in your best guess, do you think the market's going to go up or down? You put your Solana in as a wager or risk, as an investment. You choose your leverage position. And let me tell you, like you may say, well, why wouldn't I just go to 100x leverage? So when we scroll on down, it tells you everything about it. It says, here's your collateral. You're putting in $131. It's gonna be like you own $11,922. But let's go down here and let's look at these numbers right here at the bottom. So it says entry price is 130.91. Liquidation price. Now this is important. So liquidation price on a long is going to be lower than the price that you enter at. And what this is saying is if Solana hits 129.58 or 62, then we're going to take your Solana, you lose the bet. So your liquidation price is the cost you lose at. So at 100x, you got about $1 to play with. If Solana drops in cost $1, then you stand to risk a lot. And if I show you a 5-minute trade or 5-minute trend here, see here we were at, let's go to a 1 minute. Let's zoom in. Let's just do a refresh on my screen so I can let the charts update itself. There we go. So here we were at 132.34. You see that on the right? Now we're at 130. Now that's taken us 30 minutes to do that. So could it go down $1? Sure, it could. So on 100x, I got $1 to play with. So I'm entering at 130. See, it's already going down. And if it gets down to 128.92, 96 right now, then I lose. My trade's closed. I don't have any gains. I took a loss, but I only took a loss of 1 Solana because that was my original investment. So let's see what happens if I did a 50x leverage. On a 50x, see, I don't get liquidated until 127. I have about $2 to play with. On a 20x leverage, I don't get liquidated until 123. So I have about $7 to play with. On a 10x leverage, I don't get liquidated until 117. Now, it could still do that, right? So if I do some zooming out, like, I mean, it went way down today, like way down here today. So it can still do that, right? So this was today. This was 2.5 hours ago. So it's gone from 109 to 130 in 2.5 hours. And it doesn't just go straight up or down. It goes up and it goes down and it goes up and it goes down and it goes up and it goes down, right? So it keeps moving. Like that was a big up. That was a big up. But then, it went right here. That went down, 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 down. So it went from here was about 129 down to 125. So that's about a $4 dip. So it fluctuates. So the lower your leverage, the more spread you have before you're liquidated. Liquidation price is the price that all your money is gone. Whatever you put at this top field right here, it's all gone. So if you run at a 5x, now that doesn't get you much, right? It means for every 1 Solana you put in, it's kind of like you have 5 Solana. So for every $1 that Solana goes up, you're making about $5. But you put one of them in, so you're making about $4 for every $1 it goes up. Now, if you catch a big rise and it goes up $20, that's like $80. So that's not bad. You put in 130 and you made 80. It's not a bad day, right? Now, you could always put in more Solana here. You could choose to put in 100 Solana on a 5x leverage. Now it's like you have 500 Solana. It's a lot. You don't get liquidated until 104. So you got a big spread here. You got about $26. The number between this and this, you're entering at 130. You get liquidated at 104. So really good opportunity there. Now, if we scroll on down and we look, it's an opening fee. This is how much it costs to open this position. So it means every time we open a new position, this is what it costs. Now, it costs that because I put in a lot of Solana. If I would only put in 1 Solana, my opening fee is only 38 cents. But if I put in 100 Solana, my opening fee goes to $38. So it's just relative to how much Solana you put in. Now, any of these that you get confused on, you can just hit the little I here and it gives you it tells you your price impact and all that stuff, like what it is. It's a tooltip, so it'll tell you what it is. So now let's look at borrow rate. So you may say, well, great, I'm going to find a low point, I'm going to long Solana, and I'm just going to leave it open indefinitely. And I'm just going to keep riding it and riding it and riding it. And that would work, right? But it costs you 0.00029, sorry, only 2 zeros, 0.0029% per hour. So every hour that you have this trade open, you're paying 0.0028% right now, it says, for the borrow rate. So that's costing you a little bit of money, right? Not much, but a little bit. So let's figure out what that is. So if we have $1,000 times 0.0028%, that would cost us about 2.8 cents per hour times 24 hours. Oops, come back. That would cost us about 67 cents a day times 30 days. So that would cost us about $20 for the month. That's okay, right? But it does factor into our expenses. So down here, if we have any open positions, it would show. I have nothing open right now. But I did a trade this morning. So I timed when the market opened. I chickened out. I should have let it stay longer. I wasn't sure where it was going to go, but I saw a gain and I took it. So let me show you what I did. So I originally opened my trade right, where was it at? Hold on. right here. So I opened it. I put in $266 at $110.85. I sold at 118. So I made $7.15. But I was on a 50x leverage. So I made $50 for every $1 that it went up. And what actually it's more than that, the way it all works itself out. What I ended up making was $815.27. And if you look at the timestamps over here, it was 8:30 this morning to 8:42 this morning. So in 12 minutes, I made $815.27. The fee on this was $8.91 here, $8.84 here, so I had to pay fees. But I made $800. And what I did is I timed the market. I had a hunch that we were at a local bottom at a 110-ish. I timed the market. If you notice, I entered my trade right at 8:30 a.m. my time. That's right at the time that the New York Stock Exchange opened. So right at the time the market opened, I longed Solana. Now, it could have went the other way, and I could have lost, but I would have lost only $266. I was okay with that. That was a risk that I was willing to take. But instead, I chose to long. And I said, I think this is going to go long, so I went long with it. I entered at 110.85. I sold at 118. I should have held it. If you see right now, it's at 129. I could have made a lot more money if I would have held it, but I took my gains. And I ended up selling, and I made $815. So I had $266 on the line. I profited $815. So this is very simple, very easy to do. Shorting works the same way. If you find a point and you're like, man, Solana's at 126 or 129.6, I think it's going to go down, you can short it on a 50x leverage, and you'll make the money on the way down. You can make money on the way up, and you can make money on the way down. So this says I will get liquidated if it gets up to 131.84. So as long as it doesn't get up there, then I'm good to go. If it does get up there, then I'm going to get liquidated. But I'll make a good chunk of change every dollar that it goes down, right? Every dollar that Solana is going down. So if it retraces all the way back down to here, right? If it goes all the way back to here, and this was just a quick pump. So if we look at like a 15-minute chart, right? If it was like, oh, okay, let's do a little pump. Now let's crash. And it goes back down to here, I could make a good chunk of change on the whole way down. All right, so you can make money both directions. It's risky. You're risking whatever you're paying. It's gone. You don't get it back. Once you have a position open, though, you are able to set two numbers. You can set a take profit, and you can set a stop loss. Okay, take profit means if it hits this number, I want to sell, and I want to take my gains. So, the market's moving, and you're not always sitting in front of your computer and paying attention. You're doing a bunch of stuff. Right, so if you want to set a number and you say, look, if it gets to this number, I want to take my profits and I want to sell. That's great. You can do that. And if you want to set a stop loss, so if you say like maybe you buy here, you're in a positive position in here, and you say, look, I don't know when it's going to go down. Right, so I'm nervous. So I want to set a stop loss, which says if it goes down below this point, then close my trade and give me what I had. And that's what I actually did today. So it was about $119, and I said I think it's going to go one of two ways. It's either going to go to 120 or 118. So I'm going to set a stop loss at 118, which means that if it gets to 118, sell, close my position, give me my gains. I bought in at 110.85. I showed you that right here. I bought in at 110.85, so I was happy with that. But if it goes up to 120, then I want you to sell and I want you to take more profit, and I would have made a good chunk more. I'd have made about I don't know, maybe like $200 more, $300 more. So that was my range, 118 to 120. Stop loss at 118 because that's where I want you to stop as it's going down. Take profit, right? That's where I want you to sell as it's in gains, right? As it's moving up. That's where I'm comfortable taking my profit. And it'll calculate it all for you and give you all the math and show you and tell you everything about it. And you're able to just go in and set it up and configure it. And then you could go and you can take a shower. You can go get on a conference call. You can do anything you want. Now, on Solana, there are 3 different tokens here on Jupiter that you can be involved in their perpetual trades. You can do Sol, you can do ETH, or you can do a version of Bitcoin, which this is redeemable for 1 Bitcoin. It's a Solana version of Bitcoin. So you can do Solana, ETH, or Bitcoin. They all work the same. You can long them or you can short them. Long as you think the price is going to go up, short as you think the price is going to go down. Whatever you're paying is what you have at risk on the line. Whatever your leverage is, right? That's how much you're actually getting to use of house money. And it gives you all of your numbers right here at the bottom. If you want to learn more about this, you can click this right here. They have a really good help articles and everything. Tells you everything in more detail. I'll link to this in this training, so you can go and you can learn about it. I'll link to Jupiter here in this training, right? So you can go and you can learn all about this. You can play with it. You can see what you like, see what you don't like, see if you can make some money and gains like I did. Look, that's those 2 trades right there. That's $1,000. That's $1,000 I wouldn't have had if I wouldn't have done it. Now, they're not all positive. Here was a $119 loss. But there was a $572 gain. There was a $32 loss, so it's not all positive. Right? Everything I do is not positive here, but a lot of it is. So feel free to go explore. And even if you don't, at least now you're a little bit more conversational with perpetual trading.